Good morning. It is July 3rd, 2014. It is a Thursday, UPB here, optionmillionaires.com. A couple hours before a holiday-shortened trading session. We have the jobs report this morning, but most importantly, we have the 4th of July weekend coming up. Enjoy it, have fun, and be safe. Most importantly, be safe. You don't want to be blowing any of your fingers off. It makes it a lot more difficult to trade. We have the IWM up here. It's a 2-year daily chart. You see that head and shoulders topping pattern, much like every other head and shoulders topping pattern that this market has seen since the lows in March of 2009. Yeah, it didn't work out so well, huh? But you can see once we hit our highs here just recently, 2 days ago, been kind of melting. We pretty much melted all day yesterday. Look at this melt. So orderly. This market is just so orderly these days. What an orderly market. Central banks should be so proud of themselves for creating this orderly market. We had a last minute pop up, but I think we're going to head back to this high here, possibly today on the jobs report, although somewhat unlikely. The reason being is that we're just so close on the SPY to that 200. 200. I mean, that is just, woo, look at this chart here. Again, trend remains slightly biased toward more upside. I don't know. Just taking a wild guess. That's just a 2-year. Let's go back to the 5-year. Oh, yeah. Oh. So anyway, we are a mere less than $3 away on the SPY from 200. Wow. I mean, we're just going to get there. It's just going to happen. Somehow, some way. Doesn't matter if we get a fluorescent yellow swan event. No. SPY is going to get there. So let's go over some charts real quick, and then we'll head into the trading session. Hopefully, have some nice trades here, but I think it's going to be more of a muted session. Everyone's already on vacation. Shutterfly was up 15%. JB at optionmillionaires.com been talking about this one for quite a while, just like he was talking about Open Table a couple days before it was announced by Priceline that it was getting bought out for 46% premium. Talking about Shutterfly as a great acquisition candidate, also a solid, sound company with tremendous revenue and performance quarter over quarter. You can see the stock closed exactly at 50. If you look at a long-term chart that I had the drawings up, I just pulled up this morning, you can see resistance about the 52.50 level. So it's got another 5% to go before it starts to hit some choppy waters. And you see a nice volume breakout here to the upside for Shutterfly. And if we do indeed break out of this, we can be looking at the record levels that we saw back in 2011, $65 a share. Open Table, just to bring it up, you can see the spike it had. Yeah, that's pretty nice spike there when Priceline announced they were acquiring them. SSYS, another one talked about Option Millionaires. You could see it hit up against trendline resistance, but it was a beautiful move off the lows. JB had some of those 115s, I believe, the 112s. DDD is the stock I've been talking about. You go to blog at optionmillionaires.com. That ripped to almost $70 the other day. I was talking about it down here. You look at stock twits and Twitter for a move, and you can see one of the charts I posted with a nice arrow pointing precisely at these gains. Just miraculous how that happened. Same with FVYE. The stock now is contained above former support back here in December, and then briefly, ever so briefly, before it plunged through it in May on its earnings report. And you see it bumping up against that line. We break through that, and it's on like Donkey Kong for FVYE. How about CRM and Priceline? I'm in both of these option contracts. I got the 172.50s early this week we'll start with LinkedIn. I got the 172.50s on LinkedIn for something like 85 cents. Those went up to almost $4 the other day. And you can see LinkedIn's working its way off of support, and I think it's going to break out to the $200 level. And then we'll find some resistance there, some headwinds. So I like CRM here today, and short term as well as medium term till we get up to that $200 level. Not sure it's going to get up there. CRM's another interesting one because we're putting in some sort of a head and shoulders. We know how that's worked. We start pulling back right here. This would be a nice head and shoulders topping pattern that would get us back down into the 40s. Something to keep an eye on. But if you look at the short-term chart on CRM, it just looks so nice to me. And it was consolidating. Look at this. This is really why I got into the calls, because heading up at the start of this month and then towards the middle of the month, not this month, I shouldn't say. We're in July now, but this was June. See this flag we had? And look at the last 4 trading sessions. Actually, this week, the last 3. Really nice move off the flag here to the upside, and I'm expecting it to head up into the 60s. We had analysts come out, I think, yesterday and then a couple days ago talking positively about the stock. So Caterpillar. Let's look at Caterpillar because Caterpillar is really interesting here. right up against resistance, the long-term resistance, still butting up against it. I brought this chart up many times. We're looking at either a triple top or a possible breakout of this consolidation it's going to go fast and furious, I believe. When it breaks this level here, we're going to have the 112.50 and a 115 ultimately in CAT in a short amount of time. That's a 3 to 5% move. We have U.S. Steel also breaking out. You can see this long term. It's a 5-year weekly chart. We hit our highs here off the lows in 2009 at about 67.50, and we've been pulling back ever since. And this downward channel we finally broke out of. Now we're breaking out of this long-term trend line resistance. This is a really big break for U.S. Steel. Look at that break. I mean, that is a big break. Let me just get out of it. Let me get rid of that. You can see once we broke out there, U.S. Steel looks very bullish here for a move back over $30 a share. How about Sears Holdings? Same kind of long-term chart perspective. You can see we're contained here by this long-term trend line. If you look from a longer-term perspective, go back 10 years. It goes back to 2007. Look at this trend line here. Look at. And now, if Sears can break out of this, we're looking at significant gains to the upside. Nobody can really wrap their mind around the gains that Sears is even having these days. I mean, how is a stock that seemingly the company is falling to pieces, and you read all of these negative articles about how in a couple years from now they will not have enough money to pay, property taxes, their taxes, and just a lot of negative headlines for Sears Holdings. Nonetheless, the stock looks poised to break out. Insiders are buying stock and accumulating. So, I don't know. When it doesn't make sense, either get out of the way or just watch and learn. Sears Holdings, and then let's move on to one of my favorite tickers these days, just like everybody else, the VXX. Yeah, that looks good. Honey, I went wrong. Volatility, I'm supposed to sell everything and buy volatility because it's going to be a volatile world. Anyway, the VXX continually getting slammed. Hit a new record low yesterday. As JB has pointed out at optionmillionaires.com, the amount of movement in the S&P 500, I'll bring up the SPY, I mean, it's really been muted. I make jokes all the time about having more fun watching paint dry than actually watching the market trade. It used to be exciting. I remember back in 2008 and 2009, I mean, we'd have 5-10% moves in a lot of stocks for absolutely no reason other than nobody could find out what the value or the price of a stock was because there was so much uncertainty in the marketplace. And now, I guess, with the certainty being every central bank in the world is going to manipulate asset prices, there's no reason to buy any kind of protection for volatility or downside protection. So that's why the VIX continues to get torched. The VXX continues to melt lower. One last chart I'm going to bring up, TLT. TLT, this has been a very tricky one to chart recently, although still this trend line, I think, is going to tell a story, though. We briefly broke below it. Now we're briefly under it. So if you take all of that out of the way, let me just take the drawings off and you zoom in here. We're looking at a move up and a consolidation before possibly a move higher. I don't know. It's just it's going to be interesting to see because if you look from a longer term perspective, this is really going to have implications on where the market, even though we've had bonds being bought and the stock market being bought, at some point interest rates are going to start to pop their ugly head. And at that point in time, I think that's when we're going to have to worry about the stock market pulling back a bit because a lot of the gains have been predicated on the low interest rates, not just the banks, but also corporations buying back stock, issuing dividends. They can get debt at a cheap rate. So once we start to see interest rates start to rise, that's going to be a problem. And then you have corporations rolling over debt at higher interest rates, just not going to be good. So we're going to watch TLT here. And if you look, again, we're right up against long-term trendline support resistance. We've broken above it twice. Had a tough time staying above it now. We had the big decline really over the last 2 days. So if we see that continue, we have the jobs report this morning. We could see it strengthen, and then interest rates start to drop, and then it'll be nothing to worry about because we'll have bonds and stocks rallying at the same time again. And I keep bringing up one of the big things in this marketplace and why the bond market isn't selling off as many thought it would when the Federal Reserve announced its taper back in December of 2013 is the fact over in Europe we had countries that were ready to go belly up, whose debt nobody wanted to buy a couple years ago. We had Greece and Italy, all their debt. Nobody wanted to buy it, and now suddenly their debt, while not in demand in a sense, everybody wants to buy it, but somebody's buying it because interest rates on the debt are lower comparable to that of the Federal Reserve, the U.S. Treasury, and what the Federal Reserve is buying that debt at. So, all right, and that's why I think TLT is well bid and could see continuation of the upside after we've kind of found a bottom here. All right, UPB here, optionmillionaires.com. Hope everyone has a great holiday weekend. I'll see you in the chat room, and everyone have a great day. Goodbye.